Alright, Brew Crew, welcome back to another video of the Trade Retro. Today I'm going to take a deep dive into the Amazon Broken Wing Butterfly trade that I entered last Thursday, September 24th, and that expired yesterday, Friday, October 2nd. Over here I have the chart of Amazon up on the daily time frame. Now, last week on Thursday, September 24th, Amazon was trading at about $3,000 a share. I was looking for a cheap way to play a bounce in the stock. During that time, my bias in the markets had begun to shift to a more bullish stance after seeing how the market had difficulty grinding lower. With that in mind, I wanted to play a bounce in tech, but I knew I didn't want to pay a debit at all to play this bounce given how uncertain and choppy the markets had been. But I still wanted to set myself up to capture some large gains if Amazon did indeed bounce. Therefore, the strategy that made the most sense to me was a call Broken Wing Butterfly. Now, you know me, I'm a very short-term options trader who loves trading weeklies, so of course on September 24th I was trying to look for a cheap butterfly for the following week that I could put on for a net credit. After exploring the options chain, I came across the 3300, 3350, 3450 call Broken Wing Butterfly for the October 2nd series, which at the time was trading for a total of 37-cent credit, meaning by putting on that butterfly I would get paid 37 cents, and the following scenarios could happen. 1. If Amazon decided to tank or hang out sideways and never get up close enough to the butterfly to expand the spread in my favor, then I'd walk away pocketing that 37-cent credit. 2. If Amazon slowly crept up to reach exactly $33.50 by expiration, I'd not only get to keep that 37-cent credit, but also I'll be able to sell the butterfly back out for $50. Of course, it doesn't need to reach exactly $33.50 by expiration. If Amazon slowly worked its way up to near $3,300, then the butterfly would expand very nicely as well. And the third is, if Amazon blew past $3,400 by expiration, I'd see a loss up to a maximum of $50 per spread if Amazon moves past $3,450. And that's because the $3,300, $3,350 long call vertical of the fly provides 50 points of coverage before I essentially start losing money from the $3,350, $3,450 short call vertical up until that $3,450 caps off any more upside losses. So that is a rough outline of the potential scenarios that would happen with this trade. Now, given the choppy market conditions, I was okay with risking $50 per spread in order to not lose money if I'm wrong on direction, while at the same time keeping myself open to the possibility of the butterfly expanding in my favor for some potentially very large gains. But making sure that Amazon doesn't blow past the short strikes by expiration is tricky. I needed more data points suggesting that Amazon wouldn't surge higher early on in the trade, because if Amazon did surge higher early on in the trade, then while the 3,300 long call would rise in value, those two 3350 short calls would also rise in value, and because there'd still be some time value left, they could be very juiced up and eat away at the profits of that 3300 long call. So much so that the 3450 long call won't even be able to offset those losses, especially given how far out of the money that 3450 call is. Now, looking at the chart, I found that at the time Amazon was trading at around $3,000 a share. In order to reach 3300, where the first long call of the Broken Wing Butterfly is, the stock would need to first breach the 38% fib retracement of the move from the September 2nd high to the September 21st low, and that 38% fib retracement is around 3131. And second, Amazon has to breach the 20 and 50 MA. Third, Amazon has to breach the 50% fib retracement at around 3211. And finally, Amazon has to breach that 61.8% fib retracement at around 3292 before finally reaching that 3,300 long call. All of these levels, I felt, should provide some resistance for Amazon to have to chew through over the following week before it even gets to the long call. And by that time, if Amazon did reach 3,300, then the 3,300 long call would still have a lot of extrinsic value left, somewhere around maybe $20 on the last day, while the 3,350 short calls would be very cheap, each around maybe $5 to $10. So the entire spread could be roughly worth, $10 to $20, which would be great because that means I'd be getting paid 37 cents to make another $10 to $20. So with all that considered, I chose to take on that upside risk for a chance to make potentially $50 and entered the butterfly for a 37-cent credit. Now let's zoom in a bit on this chart into last week's action. So after entry, on Friday, September 25th and Monday, September 28th, Amazon made steady progress upwards from $3,000 to $3,175, breaching the 31.8 retracement and tagging the 20 and 50 MA from below. But this move wasn't large and fast enough to expand the value of the 3350 short calls. In fact, Theta did a great job draining those, while the 3300 long call did a good job retaining its premium. So the butterfly had already expanded in my favor, and I was sitting at about a small $1 profit. However, on Tuesday and Wednesday, Amazon began to stall out. By the end of Wednesday, when it looked like Amazon was putting in a topping tail, I decided that Amazon might not be able to make it near 3,300 by Friday, so I wanted to take in a bit more credit while I still could before Theta drained any more of that 3,300 long call. At the time, the spread was trading for almost $2. That's when I made a slight adjustment to the spread and sold the 3,300, 3,310 call vertical. This essentially rolled the 3,300 long call up to 3,310, and I was able to collect a small 44-cent credit for it. However, this adjustment did open me up to an additional $10 of risk to the upside because now the long call vertical portion of the butterfly is only $40 wide instead of $50. Still, with only 2 days left for Amazon to go higher, I felt comfortable taking on a bit more upside risk, knowing that Theta is going to be working hard to drain those 3,350 short calls if Amazon did decide to surge higher. And at that moment in time, I actually wanted Amazon to move more towards my fly. My deltas were still positive, and the risk graph showed that a move towards the short strikes of the fly would actually expand it by another $4 to $5 by Thursday. So after this adjustment, the trade stood at an 81-cent credit, and the profit potential on the fly was now $40 instead of $50, which is still pretty good. Now on Thursday, Amazon showed some strength and actually closed above the 50% fib level at 32.11, which meant that if on Friday Amazon worked its way up to around 3,300, the fly could potentially be worth $5 to $10. Things were looking good. On any continued bullishness, the next target for Amazon would have been the 61.8% fib retracement at 3,300. So I left the trade alone without making any more adjustments. Unfortunately, as you know, that night, news broke out that Trump was diagnosed with coronavirus and the market fell lower. By the open, Amazon was already trading at around 3150, 150 points below the fly. The spread had instantly lost all of its value, so I basically had to let it expire worthless and walked away with the 81-cent credit. Now, while the trade did not work out as well as I had planned, the important thing to note is that I was able to get paid even though the trade didn't go in my favor. And that's the power of options. With options, there are ways to trade and underlying to a certain target without ponying up a debit at the cost of introducing risk. And this may be a style of trading that you may think about putting in your arsenal, especially when the outlook of the markets is uncertain, as long as you are willing to make the necessary adjustments to control that risk. Which brings me to the following questions. The first is, what if Amazon decided to surge very early on during the trade? For example, what if Amazon had surged to 3,300 with 4 to 5, days till expiration, and therefore, juicing up the short calls and causing the butterfly to take on very large negative deltas? And my answer to that is, even though the position would be very theta positive, I would have to pony up the debit to cap off that upside risk by buying the 3,400, 3,450 call vertical, thereby turning the 3,300, 3,350, 3,450 broken wing butterfly into the 3,300, 3,350, 3,400 balanced butterfly. From there on out till expiration, I would look for ways to reduce that debit incurred from that adjustment. Now you might be asking, well, what if Amazon tanked afterwards? You could end up getting whipsawed. And to that, I'd say, I'd rather be safe than sorry and make the necessary adjustments to avoid getting run over because I don't like playing the hope card. I could always undo the adjustment and look for ways to collect back more credit at the cost of, perhaps introducing risk elsewhere, depending on my new directional bias on Amazon at the time. Now, some of you might say, your maximum loss is so large, $5,000, I'd never make that bet. I would never risk $5,000 to potentially make $5,000. And to that, I'd say this style of trading is not for everyone. And there are different ways to perceive risk. I don't really think of risk as binary as, max gain versus max loss, right? And you have to understand that if the trade had gone against me, I'm not going to open myself up to the possibility of eating the maximum loss. I'm going to manage that risk and make sure that I don't lose any money at all on the trade. Basically, I'm not going to just put on the trade, walk to the prayer room, and come back at expiration and hope that Amazon expired right at 3,350. Right. So yeah, that's basically it for this trade. A lot of us in the chat room took a similar approach to trading Amazon this week. Things looked great for us on Thursday, but we basically all got teased and blue balled on Friday, but at least we walked away with some profits. Now, if you want to see details on what my spread looked like as it progressed throughout its entire duration from start to finish, feel free to check out the trade update videos recently starting from September 24th. But hopefully this trade was somewhat educational, especially if you or someone you know ended up trying to play directionally but got chopped up over the past few weeks. If perhaps they knew about some cost reduction strategies, then maybe, just maybe, they wouldn't have gotten chewed up by Theta Gang. And if they were wrong on direction and got cucked by Trump, then they can say, hey, no harm, no foul. I got paid to play. Thank you, Options Brewers. And we'd be like, oh, no problem. Come join us in the free chat room to see what other trades we got on. Nah, I'm just playing. But in all seriousness, if you have any questions or comments, feel free to leave them down below. And most importantly, join us by checking out the links to our Twitter, Discord, and Twitch down in the description below. It's all free. We share our thoughts, trades, setups, entries, exits, all that good stuff, all that good commentary, and all those good vibes. All right, but for now, stay safe, Brewer, and we'll catch you in the next video. Cheers.